Hey there, fellow investors. Welcome back to Uncle Starts Fire, your ultimate finance and investing channel. I'm thrilled to share with you the delightful dividends I've received from my investment portfolio for the period from January 1st, 2023 to June 30th, 2023. Get ready for some juicy numbers and exciting insights into the top 10 dividend performers. Let's dive in. Before we jump into the exciting world of dividends, let's take a quick look at the performance of dividend stocks and REITs in the first half of 2023. Following a challenging 2022, the REITs market globally has shown some signs of stabilization. While it still has some ground to cover to reach the levels of the previous year, there are promising trends on the horizon. Peaking interest rates, attractive valuations, and the recovery prospects of Asia-Pacific shares and REITs markets create an optimistic outlook for the second half of 2023. Now, let's uncover the stars of my dividend portfolio. Uncle's Top 10 Dividend Performers. Manulife US Trust. Claiming the top spot is none other than Manulife US Trust. My current market value of holdings is at $23,698. It has successfully navigated the challenging market conditions and showered me with dividends worth $2,130, boasting an impressive dividend yield of 28.1%. But this trust sure knows how to make trouble for its investors, with its share price performance year to date facing a significant decline of -43.7%. However, Manulife US Trust dividends has shown resilience like a durian husk protecting its delicious fruit. While I have previously shared my thoughts on this trust in a detailed video, see link above, I must emphasize that the current prices may have factored in the challenging US office market, presenting a potential opportunity with dividend yields close to 30%. However, it's important to note that structural risks persist, and caution is advised. CapitaLand China Trust. Stepping into the spotlight at number 2 is CapitaLand China Trust, formerly known as Capita Retail China Trust, with a current market value of holdings at a significant $41,922. This trust isn't limited to just retail properties, it also holds logistics properties, diversifying its income streams. What makes CapitaLand China Trust even more exciting is its connection to the parent company, CapitaLand. With CapitaLand's extensive pipeline of properties in China, there's a potential for attractive yield injections into the trust. It's like having a steaming plate of dim sum with a side of siu mai, delicious and diverse. ARA US Hospitality Trust. Securing the third spot is ARA US Hospitality Trust, with a current market value of holdings at $28,957. Despite its current weak share price performance, I see this as a unique opportunity for investors to consider. With an investment of $28,957, ARA US Hospitality Trust has rewarded me with dividends amounting to $1,078 and an attractive dividend yield of 8.4%. So, while it may seem like a cloudy day, there might just be a silver lining behind those hotel curtains. Now, let's talk about QAF Limited, a company that has made some strategic shifts in its business focus. Having sold its pork businesses in Australia, QAF Limited is now focusing on its bakery business in Southeast Asia. This shift has resulted in a more stable revenue stream for the company. With a current market value of holdings at $18,285, QAF Limited has rewarded me with dividends amounting to $897 and a satisfying dividend yield of 6.1%. So, while we bid farewell to the pork, we say hello to a wonderful future. Netlink NBN Trust. As we eagerly await the conclusion of the regulatory pricing review, Netlink NBN Trust has us on the edge of our seats. With a current market value of holdings at $28,472, this trust plays a vital role in Singapore's telecommunications infrastructure by operating the nation's fiber broadband network. It has provided me with dividends totaling $872 and an enticing dividend yield of 6.0%. The outcome of the review could potentially impact its future profitability. However, my optimism remains high, like waiting for the latest episode of your favorite drama series. Stay tuned for the big reveal. CDL Hospitality Trust. While CDL Hospitality Trust may seem to offer a lower yield compared to some other shares, I believe there's room for growth in the recovering tourism market. With the end of the COVID crisis in sight, travelers will be itching to explore new horizons and check into their favorite hotels. With a current market value of holdings at $24,582, CDL Hospitality Trust has rewarded me with dividends totaling $719 and a comforting dividend yield of 4.5%. So, let's keep an eye on this REIT as we pack our bags and prepare for a much-needed vacation. Next on our list is CapitaLand Integrated Commercial Trust, a true representation of Singapore's property market. With its portfolio consisting of office, retail, and mixed-use developments, it's like an economy rice stall offering a variety of dishes. This trust, with a current market value of holdings at $23,720, has provided me with dividends totaling $666 and a satisfying dividend yield of 5.7%. So, if you want a taste of Singapore's property market, this trust should be on your investment menu. Taking the 8th spot is Lendlease Global Commercial REIT with a current market value of holdings valued at $17,556. This trust has a global portfolio of prime commercial properties, offering investors exposure to high-quality assets. It has rewarded me with dividends totaling $659 and a dividend yield of 7.4%. While its share price performance year-to-date faced a decline of -7.0%, Lendlease Global Commercial REIT continues to provide consistent dividends and holds potential for future growth. Spider Straits Times Index ETF. Securing the 9th spot is the Spider Straits Times Index ETF, with a current market value of holdings valued at $32,840. This exchange-traded fund aims to track the performance of the Straits Times Index, representing a basket of Singapore's top companies. It has provided me with dividends totaling $600 and a dividend yield of 3.7%. While its share price performance year-to-date faced a modest decline of -3.0%, the SPDR Straits Times Index ETF remains a core holding in my dividend portfolio, providing exposure to Singapore's market leaders. Last but certainly not least, we have Keppel Corporation, which has experienced a share price decline year-to-date. However, it's important to note that this decline can be partly explained by the share distribution of its oil and gas subsidiary to existing shareholders. Keppel Corporation's subsidiary is now known as Cetrian. With an investment of approximately $20,000, Keppel Corporation has rewarded me with dividends amounting to $540 and a delightful dividend yield of 4.9%. So, while the waves may be choppy, there's potential for smooth sailing ahead. And there you have it, the impressive dividend performances of my top 10 shares in 1H 2023. These companies and trusts have not only provided consistent income through their dividends but have also shown resilience in challenging market conditions. Remember, investing in dividend stocks is like savoring a delicious meal. It's a long-term journey that combines taste, patience, and the promise of great rewards. Stay tuned for more dividend adventures on Uncle Starts Fire, your go-to channel for all things finance and investing with a uniquely Singaporean flavor.